So we've had quite the downside since this reversal day I shared on February 15th, if you remember that from the past week. And now we are all the way back sub 400 on SPY. And this is after quite a bit, if you look over here on SPX, it's after quite a bit of gap downs and a lot of bearish momentum that we've seen within the past 1 to 2 weeks now. So the bears have definitely taken the reins, especially after we saw this large short squeeze rally in the past month to 2 months or so from right now. So as you can see, bears have definitely taken hold of the market. And as my macro thesis stands, I do believe we will see a lot more downside. But as of this week, I do expect there to be a little bit of a form of a pause. This is not as tradable of a pause, like for somebody to say, oh, I'm looking for a bounce, let's say a very short-term bounce on the way down. I don't expect there will be a large bounce until this range is met. As you can see, the white box and also this yellow line. This is the convergence. The yellow line, at least, is the line that goes to all-time highs, and the white box is a key demand zone that we've seen act as a very strong support previously throughout this past year. But what I am looking for this week is some more sideways action. Yes, is it possible for continuation in the downside? Yes, that is possible. But for now, it seems like, at least just based on the fact that we're seeing some oversold conditions and the amount of momentum we've seen in the past, I'd expect there to be some form of sideways to slash slightly up price action for the time being. Now, I must note the result of this will be down, and we will continue downward to eventually break this key line over here after it's retested later on. But as of this week, it seems like there will need to be some form of a cool off period for the bears, just because this has been a lot of momentum to the downside. There are 4 unfilled gaps to the downside so far, which is very uncharacteristic of what we saw previously when we were going to the upside. Whenever we saw a gap down, it was previously filled very quickly, like we saw here on January 24th to 25th, just filled very quickly after. So this is something that I'm watching, as well as this channel over here. This channel, if I look at the 15-minute chart, you can see that we've been trading within this for quite a while, and then we closed right below it. So I'll continue to watch how this channel plays out. But again, we are going to see, very likely at least, this retest of this level right here. This is the line that goes to all-time highs, which I'll just show you here on the daily. And yes, the blue lines, if you remember from our previous video, which if you are new here, do subscribe below. I shared my reversal structure for the 18-day reversal, which we've seen play out with about 100% accuracy from the past year in this bear market. But this line right here, the gray one, goes to all-time highs, and I was predicted the resistance that we fell off from for each bear market rally each time. So we saw it end of March, we saw it in the middle of August, we saw it over here in end of November, early December, act as a resistance. Then we broke out above it, and this will be retested fairly soon within this week or the next week, and it will prompt some form of a minor bounce. However, my expectation is we will fall back under this level, and that is when things start to get very interesting and selling really accelerates to the downside, because all of this above would be a form of a fake breakout. And you guys know, whenever we see a fake breakout, price really takes it to the extreme whenever it goes to the opposite side that we saw, which in this case would be down. So do keep these of note. And as you can see from up here, we are back on, if you guys have been a long time subscriber of the channel, this orange trend line. We got rejected very hard off of it from the past 2 weeks. It was unable to hold above just based on the weekly chart. And this orange line, which I have shared many times in the past, this one goes to the 2009 lows. Very critical trend line. Acted as a support at first when we were above it, and then it acted as a resistance throughout the entire QE period that we saw from those 2009 lows. You can see resistance here and here, resistance from up here in 2018, and also was resistance before the COVID crash. And right now we just retested it again, and it failed, or at least price failed to get back above it. We did see 1 week close above, but we saw a similar thing from back here end of November, where we saw price close above but then get rejected very hard afterwards. So this is very key that bulls were unable to hold it above. We saw hard rejection, and as of now we are below this. So the bears have the ball in their court, especially in a macro sense. So any bounces will be short-lived with the trend being down as of now. So just want to make that a point. And as we can see throughout the flow from this past week, 76% put flow to 24% call flow. If you look through these, a lot of these were fairly basic orders, or we saw a lot of these arbitrage trade strategy orders for like super deep in the money ones, like this 439 strike that we saw 2 times over here. So nothing too interesting from this past week other than these highlighted ones that are above the ask. We saw 1.4 million in premium for the 380 strike. They got this one at the 400 spot price, 1.1 million at the 390 strike. So nothing too insane, not as insane as what we saw from the 14.8 million print, which actually occurred, if you look from over here, on the chart. This one happened in the high range that we've had so far from back here in early February. So they have nailed this and literally doubled their initial investment on that trade as of lows from Friday. So 14.8 million in only a few weeks is quite the trade for sure. And they are certainly happy, at least that whale. So that is a very unusual order. We mentioned that order and how I'd like to follow it from all the way back in the video we made from early February. And as of now, this was a very successful trade for them. It was a very rare trade to see something at least over 10 million in premium. For the put side, we see these 1 million ones. These are rare still. These are still valuable prints to see these, especially when you constantly are watching them hit the tape. But when you see something like 14.8 million, that is definitely eye-catching and something you should at least watch for sure. Obviously, no trades are 100% and whales can be wrong, but at the end of the day, this is a game of probability. As long as you're right more than you're wrong and you have good risk mitigation, of course, then you can be profitable in the market. So just looking throughout all of these, again, nothing too serious in terms of put flow that we saw from this past week. If we go over to here in the dark pool levels feature, you can see we saw 2.6 billion in premium at the 400.62 level. This is a decent amount of premium for sure. Anything over 2 billion, you're starting to get a bit more rare. Anything over 3 billion, very unusual to see. So we're getting near to that level. This 400.62 level, very key to note for this week. If we look back at previous days, like to Thursday over here, you can see only 1 billion, nothing too insane. So again, nothing too insane under the 400 level, at least that we've seen so far. If you look back to Wednesday, you can see again, only 1 billion under this 400 level. So not too much. So if you are bullish and wanted to see some form, let's say even a short-term move to the upside, we haven't been seeing that much accumulation. A very short-term move can happen, but again, my expectation for this week is it's more sideways / slightly up. And again, we haven't seen that much accumulation. So institutions just haven't been buying this dip as of now, and that's at least just based on what dark pools are sharing with us so far. If you look over to here on Tuesday, we saw another 2.6 billion in premium, and this was at the 407 level. So these seem to be more sizable sells up here in the 400 range, especially with the ones we saw from back here. I've referenced these a lot, and these occurred in that level that we saw the 14.8 million in premium put. The 415.20 and 416.70 levels acted as large distribution zones, and I was calling that back then, talking about how I seemed to be distribution, or at least distribution phase. We saw these large sells via the dark pool, and now we're all the way back below 400. So these were large sells indeed, and they've literally marked the high range thus far in the market, at least for this bear market rally that we experienced prior. So definitely a large sell-off from there. And additionally, on top of that, if you look over to here to the VIX, we didn't see too much strength from last week. Kind of sold off at the end of the week, but still the VIX has been able to get out of this range from over here, at least this white box. We saw a retest on this previous week, or at least 2 weeks ago. I retested it and was able to close back above with follow through. Again, the wick was pretty high from this past week, but still it's remaining above this zone, which each time characteristically that we have touched it, if you look from previous price action, it has prompted a rally all the way up to the mid 30s. So again, we are bouncing off of this so far. And if you are a bear in the general market like I am, I do want to see this continue to hold above this range for further upside. Additionally, we're starting to see a very substantial downside move here in the Dow. I've been talking about how this was a distribution phase now for quite a while, at least this consolidation that we saw, and I compared it to a coiling spring, which whatever direction it decided, my bias being down from back here in this consolidation, whatever direction it decided would have a very pronounced effect, and we're starting to see that play out to the downside. I fully expect this trend line to be retested within the next couple weeks now, and this trend line, very similar to SPX, is the one that attaches to all-time highs, and this is the downward trend line that was respected throughout this bear market. We went above. It was the first of the indexes to get above its own downward trend line respectively, and now we will probably see another retest of it. We've already seen one retest, so the second one won't be as favorable to bulls and eventually will collapse back under, but so far it is targeting that for right now. Similarly with SPX, there's a potential of more consolidation at least this week, since we've seen a lot of downward pressure thus far, but still this is a large form of consolidation that will have an impact on the price action that we're experiencing now in the Dow, and also will weigh on the general market. And on top of the Dow strength, if we look over here to the dollar for DXY, no surprise the Dow has been having a fairly difficult time so far, is because the DXY, at least the dollar, has had a lot of upside, which has put a lot of strain on your classic industrial stocks. And we've seen over here that we're within this supply range so far. Last time we were within this range, we saw a hard rejection. It is a key supply range. There's a potential that we consolidate in here because, again, it'd be very difficult to get back above this level. Also adding into that consolidation thesis for the S&P 500, at least within some form of a range, or at least for this week or early this week. But if you are a bear in the market, you do want to see continuation upward within the next week or so above this level. If that happens above this 105-ish level, above this the white box that is, we will see a lot more upside in DXY, which will put a lot of strain on the general market. So just be aware of this. And other than that, though, appreciate you guys watching this video, and I will see you guys next time on Wednesday.